You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the OptionsInsider.com and co-hosts Alex the Viceroy Jacobson from Options Express, Uncle Mike Tusaw from RCM Asset Management, Andrew the Rock Lobster Joe Venazzi, and Mark the Greasy Meatball Sebastian from OptionPit.com. The Option Block is brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, everybody, you know what that rockin' tune means. It's time once again for the Option Block, everyone's favorite bi-weekly source for all things options related. My name is Mark Longo from the OptionsInsider.com, as well as from the ever-exciting, ever-compelling, ever-interesting Options Insider Radio Network. Again, if you haven't checked out the latest editions, make sure you tune in to Trading Tech Talk, where we break down all the cool tech that is powering your trades behind the scenes. All the cool stuff you may have never imagined actually goes on after you click that mouse button for a trade, as well as Options Playbook Radio, where we break down a lot of the option strategies you may know of or be familiar with, and some interesting sports metaphors. That's a quick little weekly 15-minute tidbit, a little review of option strategies there with some sports terminology mixed in for those guys who like that stuff. Offensive, defensive plays, all that fun stuff. And while you're checking out those new shows, make sure you check out our new Options Insider Radio Network mobile app, available for iOS and Android and even Kindle Fire. I know some of you wrote in recently saying you're having a hard time adding Options Playbook Radio to that Android app. It should be fixed now. Let me know if you're having problems. Still, let us know here. You hit that contact, that feedback button in the app, and we'll make sure. If it's still not working for you, we'll get to the bottom of it. But everything should be fixed. All right, and joining me on the old All-Star panel, bit of a truncated crew today because the boys in the Option Pit are off running about. Andrew's on a well-earned vacation, and Mark is just gallivanting off somewhere. We don't know. But fear not, listeners. We have quite the active team ready for you today. Starting off with the man beaming in from the scenic and centrally located OXHQ here in scenic and sunny Chicago. None other than the Viceroy himself, Mr. Alex Jacobson. Alex, welcome back to the show, sir.
Good to be here, Mark. Today was a great day. Today was just one of those days where everything went right. Everything felt good. Volume was good. Lots of interesting stuff going on today, obviously, with the Euro Union going to negative interest rates. But it's just all kinds of good stuff. And later in the Express Block, I'm going to talk about one select group of Schwab customers that can now trade options for free. We've eliminated sales charges on options. But again, I'm going to put an asterisk up here. It's a select group of Schwab private client customers. So interesting stuff going on today.
I like that, sir. That's called the tease. All right, and without further ado, let's get into that stuff. It's time to dive right on into the Trading Block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, and welcome to the Trading Block. As you know by now, listeners, this is the portion of the show where we break down what was moving, what was catching our eye, what was lighting up the old tapes here in the broad markets, as well as from a more narrow options perspective. And from a broad market perspective, as Alex alluded to, it was a bright and cheery day on the old street. Most of the major indices closing up aggressively to the upside. S&P closing up about 0.75 of a percentage point or so, or nearly 13 handles to 1940 and a half. The Dow closing up about a little better than half a percentage point, or nearly 100 handles to 16,836. The Qs closing up about a little bit better than 0.75 of a percentage point. So Qs leading the charge to the north, and then the VIX cash, as you might expect, given all the upside move, taking it off a little bit down to about 11.68 on the day. Alex, since you get pride of place today, what caught your eye? What was lighting up the old tape over there at OX today?
So I'll talk futures and futures options first. And today they were both very, very busy in both the gold complex. Gold has been selling off and got a little trade lift today. But energy is picking up again. And even though there hasn't been a ton of volatility, little vol in nat gas and RBOB gasoline, both the futures in the energy complex and the options in the energy complex just were hopping today when I spoke to the desk. The other two names in equities, and I will admit one of these is my favorite, talked about the stealth rally in Amazon on Monday's show. Amazon up 20 handles today, announcing that they'd be making an announcement. I always love that's kind of
you have to love that.
Yeah, the Apple tradition. We're going to hold a meeting, and then everybody speculated that this was the 3D phone coming. And it was funny because watching CNBC and Bloomberg today, you know, they always bring on both sides. The person who loves the stock and thinks Bezos is a genius, and the person who says they've never made money, but if you bought the stock at the IPO, you're a millionaire. So I don't understand that. Therefore, it's got to go down. And just saw both of those sides today. Amazon is one of my perennial favorites, and in the interest of full disclosure, I own the stock, I own options, my family owns the stock, but a company I like a lot, and up 20 handles today. And Twitter, which has been falling out of favor, got upgraded today by a couple analysts, and I think even before the upgrade, what people were saying was if you saw it down back into the low 30s, start buying things like the midterm expirations, a couple bucks out of the money call options. And that's what we've been seeing. And the stock had trade lift today. So today was just, for me, it was a feel-good day. So I don't know if it was just me, but I continue to be bullish. I continue to listen to, CNBC and Bloomberg, where someone comes on every day and says, look, the market's going to sell off because it's at highs and because volatility is low. Market doesn't have to sell off because it's at highs or volatility is low. Yes, eventually we'll get some pullbacks here. And when we do get pullbacks, the pundits on CNBC and Bloomberg and Fox News will again do the end of the world commentary. They'll bring out the perma bulls and the perma bears, and they'll bring out the Rubinis and people like that who will say, Dow's going to 10,000. Anyway, Dow over 16,008, S&P closing just a fraction above 1940. We're going to see 2,000 in the S&P maybe next week, the way things are going. Maybe some intermediate detours, but just a good market and a good trading day. Volume was good. Just a good day overall.
I never knew you were such a diehard Amazon bull there, Mr. Viceroy. I've always been a big fan of them as well. We always point out the Apple detractors here. I think Amazon's one of those firms that has always had probably even more detractors than Apple from the get-go. I can recall in the earliest days of Amazon back when I was still on the floor and just hearing nonstop talk about, even back then, they're burning through cash, they're going to be out in 3 months, 6 months, and that talk seems to have continued and reiterated and reverberated, even though the stock continues to rally. They still do well. People always say they don't make enough money on their initiatives. They spend too much money on this and on that, and they do things like Prime and everything else that they don't have to do. But you're right. It is one of those interesting names, and they certainly are doing interesting stuff, and they're starting to get that Apple effect to them. They announce an announcement, and there you go, off 20 handles to the north. So interesting to see if this is a buy the rumor, sell the fact, or if this is actually going to be this miraculous device everyone's anticipating and it's going to send the stock up north again. Interesting stuff. Speaking of miraculous devices, or perhaps lack thereof, we had Apple coming out earlier this week and talking about some of their new software stuff. And who better to discuss Apple with us than our own diehard, Apple-loving, fruit-loving fellow, Mr. Uncle Mike Tusaw from RCM Wealth Advisors. Uncle Mike, welcome back to the show, sir.
Yeah, it's great to be here on a 70-degree day in Chicago. I noticed after a winter like what we had, and I know it is June, but we'll take all the good weather that we can get nonetheless. But yeah, today was also a very feel-good day to me because I was looking at the underlyings with which I follow and invest, and it felt good, I must say. So with Apple, I think that with the split just around the corner here in the next few days, just depending on when you're listening to the show, I'm very excited to see how the stock reacts after the split. For now, I'm just riding it out with the long puts and the long stock for the time being, but curious to see the combination of the split along with the news with which they've had this week and seeing what fun things can happen with this stock in the coming week. I am kind of at the point now to where I was the last time it was up at this level, to where my finger's on the trigger of possibly pulling the plug again, but not ready to pull the plug just yet.
How fast do you think they'll break that 100 level post-split, a.k.a. 700 pre-split?
Well, what'll be interesting about it is that I don't think it's going to break 700 before the split, but once we get to the split, I don't know. I mean, that's a key number for me. For those of you that have read Jesse Livermore, he talks about when a stock goes to 100, how it's oftentimes continually goes higher right after it hits a 100 or 200 or that type of thing. But it's got to hit it first, and definitely watching with bated breath in the coming week.
Speaking of bated breath, listeners, that hiss in the background, that frenzy typing could mean only one thing. We are joined by the greasy meatball himself, Mr. Mark Sebastian. Mark, welcome back to the program, sir.
Hey, how's everybody doing? It's good to be here.
Where are you dialing in from today?
I'm beautiful Riverside, Illinois.
And Mr. Greasy Meatball, what caught your eye in today's activity, sir?
I mean, it was just a complete collapse of volatility. I mean, there's just nobody wants any risk. I mean, we're a VIX of 11.5 into non-farm payrolls tomorrow. That's just spectacular, and just consistently impressed by how inexpensive they're willing to let the straddle get. The funny part is the weekly straddles have been consistently underpriced if you don't dynamically hedge. But since the model basically assumes that there's dynamic hedging involved, the vol's actually been overpriced. But, that doesn't mean that the market hasn't actually moved the distance of the straddle. It's actually a common misconception. So just really interesting how inexpensive it is to buy price movement right now. Gamma is not that nuts.
Yeah, we were talking about this earlier on the show, just how much they're beating up on vol here. And you're right. It's not like it's a quiet weekend. We still have a big number before us before the end of the week here, and yet they're just shrugging that off like it's nothing. Non-farm has become, I wouldn't say a non-event, but it certainly has had less market impact in the build-up to the announcement and certainly afterwards. And it seems like now everyone's kind of just baking that in, and it's just par for the course. There's no scrambling to buy downside, no scrambling to buy protection. You might think even on a day like today with the market rallying, we're at some relatively low levels in the VIX. People would be buying a little bit of vol ahead of the number. You might see at least some stability in the VIX, perhaps a little bit of a pop. Nothing. Yet another aggressive sell-off out there. So you're right. It is kind of surprising. Maybe this is the summer doldrums are in now. No one wants to own anything.
Mark, what's term structure? What's it like now?
I mean, it's the term structure in VIX itself or in SPX?
In VIX.
You've got June still trading above. Well, June really came in. June settled at 1267, so about a 1 point premium. And then the spread between June and July is a full 1.5. July's still over 14. And if you go out to January, that's 17.5. VIX vol still relatively high. And, the one area, I was, that's really depressed, VXST, 10.8. But then, think about this, Alex. Realized volatility is like 4%. And it's just disgustingly inexpensive. So, and low. So it's pretty, the term structure is steep, but not insane. So when I look at this, I don't see any real expectation of an immediate pop here, to be honest.
Do you think the crush today was related to the ECB news?
It was 100% related to the ECB news. One of the things that all this has had me doing is working on using VXST versus SPX options into events. So just for fun yesterday, Alex, I kind of put together a trade where I bought 10 June straddles, so regular June straddles, and then I was selling the VXST calls that expire next Wednesday, at like the 13 strike. So I was buying the straddle for like 33, and then I was selling the calls at 85 cents, and I sold 30 of them, so that the equivalent of my VXST, if it went to 100 delta, was the same as my Vega that I was carrying in my my straddle. And if you just carried the straddle into the event this morning, you broke even. If you were obviously mixing the two, the trade itself ends up coming out way ahead because you're taking off a lot of the event volatility risk. So I've been starting to really pay attention to VXST, and it's actually getting a little bit of upside volume. I actually think there's a shot on that one. So the way I'm viewing everything, ECB absolutely torch stuff, and apparently nobody cares about non-farms anymore or employment. It doesn't matter.
Yeah,
so,
I get calls elevated to me out of the field, especially out of the Schwab field, and the cross section is not representative because I get the call after it's worked through the channel, and the rep or the regional still has some frustration, or the client still wants some level of elevation. And 100% of what I've got in the last couple of weeks, and again, I'm not implying this is 100% of the customer base or 100% of the trades. It's just 100% of the escalation I get are non-option customers who want to buy vol. They want to buy some type of vol because they're just convinced that vol's going to mean regress, and they want to own the 1926 spread, or they want to own. And I work them through it. I explain term structure and the VIX to it. Generally, the conversations don't start with the VIX. They start with one of the ETNs. And I try desperately to talk them out of that. But one of the calls I had last week, and I'm not going to disclose a lot of customer information, but the customer had worked on a bond desk and understood term structure and didn't understand term structure in VIX. So part of the time I spent was walking him through term structure and telling him how, not that it was the same, but it was the same fundamental principle. Look at the futures market or look at the implied forward in the cash market. And it was the same thing. He was going to make a huge bet. He was going to lay 8, 10, 12% of his portfolio on a long vol, long trade. And then, of course, all of them, say the same thing at the end. And again, caveat here, these are calls that have been escalated. These aren't, the vast majority of calls. But it's like, what do you think? You say, well, I can't answer that question. I mean, that's something we can't do in the self-directed environment. But there seems to just be the consensus to want to own some calls, want to own some call spreads. For some of the customers, it's own some futures and some puts, but it's interesting. It just happens every day, and it's one of the things that convinces me as a little bit of a contrarian that vol's going to go lower. I mean, I have the opinion vol's going to go lower anyway. And as I said at the beginning of the show, yeah, there are going to be some setbacks, and every day the setbacks occur. The pundits on CNBC and Wall Street will do the beginning of the end, the kind of chicken dance. But it's an interesting environment. And it's funny because everybody talks about how the market is hitting new highs and volatility is low. And you say to yourself, if this was 15, 20 years ago and there was no transparent volatility product, would the conversation be the same? And obviously it wouldn't. So the interesting thing is the fact that VIX and VIX products now exist is clearly in the language, but the number of pundits who seem to be relying on them, especially on CNBC and Bloomberg a lot, seem to rarely know what they're talking about. I'm not saying none of them.
Yeah, no, I agree.
But they're driving a lot of this conversation for the customers who want to own, the 1420 going into January or the 1725. They want to wash the vol out of it. It's an interesting time to observe this.
Yeah, and I agree. I mean, that I got an interview from a Reuters guy today that had he didn't have a negative impact, but he definitely didn't understand. He definitely was of the ilk that, and a lot of these guys are, well, the VIX is so low, which means we're obviously going to sell off, which, as you and I both know, is the silliest thing you could possibly say. And, leading this discussion about VIX and, I mean, getting through to customers that VIX is not going to, certainly VIX options aren't going to behave the way you expect, and mean reversion does not mean it reverts tomorrow, are two things that are very hard to drive home. Although, I have to admit, on Vol Views last week, which is one of a sister show of this one, Jared brought up a really cool point about, one of the advantages of VIX versus SPX. And it was this concept of having a fixed hedge, in that, if we go to 2,000 in the next couple months, where's the VIX going to trade, you think, Alex? What, 11, 12, maybe 10.5?
Lower. I hate to put a number on it, but lower.
So let's just say 10.5. All right. So if I buy a 12 or a 13 call, VIX isn't going to move that far away. Whereas if I hedge at these low vols using SPX, I lose, because there's this concept of, fixed strike. So the SPX hedge could become more relevant. So VIX hedging does have some elasticity to it that, some of the other products do lack. And that's what makes it kind of an interesting thing to look at if you think there could be some action in, let's say, September or October or one of the further out months.
Just to kind of add to what Alex was saying earlier, I remember back in 2008 when I was on the seminar circuit, and I would just consistently go from town to town, and we would speak in front of 200-300 people. There was one time I remember we were actually, it was in Vegas, ironically. It was in September of 2008. And the VIX was in the 30s. And at the time, VIX products they were somewhat new. They weren't quite as they weren't near as popular as they are today, but they were just starting to get legs, so to speak, with the options on them and everything that there was. And I remember at the end of the presentation, Jim Bittman from the CBOE and I were doing the presentation together, and it was during the Q&A. And normally we'd get a variety of questions about whatever the platform we were talking about or trading in general. For about an hour and a half, I was pummeled with questions on how to trade the VIX. Well, if I'm worried about implied volatility or worried about time value, should I do a spread on the VIX? Can I do a butterfly? How do calendars work on the VIX? Which that was a whole other can of worms, but nonetheless. Everybody and their uncle wanted to short the VIX because, after all, it had to revert to the mean. There's no way the VIX could possibly get past 40 because of the fact that that's clearly where resistance is. We have a very good economy. Things are doing well. Now's the time to short the VIX because of the fact that it's going to revert back to the mean. And then if you just get a chart right now, you'll see that about 1 month later, the VIX topped out at 89. So just because something is really low doesn't mean that it has to, or really high for that matter, doesn't mean that it has to revert back to the mean, because in 2008 it obviously didn't.
think about this in my lifetime, and I'm the oldest guy here, and I don't know if that gives me more credibility, but I've seen a VIX. Now, keep in mind, some of these numbers were simulated, but I was at SIBO when we went back and recreated the VIX. I've seen a VIX of 6, and I've seen a VIX of 150.7, and those were in the same month. So, every time you make the case of mean reversion, keep in mind that when you get a market event, that mean can come up or move down and slaughter you. Waiting for mean reversion is great if you've got lots of capital, but when you get the market events, and those events will occur, and they'll be both setbacks and surprises on the upside, waiting for mean reversion can become a very unprofitable, very disappointing trade. Will you get mean reversion? Sure, if you live forever. But just trading something for mean reversion frequently doesn't work. Not never. Sometimes it does, but it frequently doesn't work. And again, I'm the guy who saw a VIX range of 143 points in the same month.
I got to ask, what month was that?
October 87.
Okay.
It was much 7 and change going into the crash, or however you want to characterize the crash, and it was a little over 150 that day. And the problem with that 150 number is you didn't have continuous pricing in the SPX. You had some kind of gaps and holes. So probably the reality in that period of market distress is the VIX probably was more in the 250 to 300 level. So, stuff happens, and stuff will continue to happen. But just basing a trade based on this should mean revert, lots of stories I can tell you of people on the floor, portfolio managers, who got a career change waiting for something to mean revert.
Listeners, if you like this conversation, you are doing yourself a disservice if you're not tuning in to Vol Views every week. We record that on Fridays. It comes out every Monday. I'd imagine a lot of you out there have already discovered that show, but if you haven't, we have this conversation essentially for an hour every week, all about these different topics in the volatility trading space, volatility analysis space. We welcome on a lot of great guests from the world of volatility trading and analysis and academia and all sorts of fun stuff. Like just last week, we had a great conversation about this subject, talking about a lot of interesting research about whether the VIX is quote-unquote too low. Hint, hint, all of us agree that this is not exactly too low. The long-term average of 20 probably should be a lot lower, somewhere in the 15 to 17 range. As Mark mentioned, Jared, one of our other co-hosts on that program, also had some interesting data coming out of his research about looking at SPX skew and how you would think if this was a market where everyone is as complacent as the media would have us believe, as that persistent drumbeat would have us believe, that SPX skew would not be relatively high, relatively inflated, and yet we're in about the 95th percentile for markets like this from a pure skew perspective. So people are still buying downside out there, which if they were complacent, they wouldn't be. So there's a lot of great data, a lot of great stuff, a lot of great aspects to this conversation that we have every week in Volatility Views. I encourage you to check that one out if you haven't done so already. It's, of course, available in our app there as well. So if you're streaming this through the app, just go on into the All Shows tab, click on Volatility Views, and click Add It to My Shows, and you can check it out for yourself. All right, and now we're going to keep on rolling right on into our next segment, The Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for The Odd Block.
All right, listeners, you know the drill. It's time for some of the funkier, some of the weirder, some of the downright bizarre stuff we get to here on the old show. Yes, it's time for the Odd Block. Going to kick things off with, I believe, a newcomer to the old Odd Block. We do so many now, it takes quite a bit of research to make sure this is perhaps a newcomer or someone we didn't talk about 3 years ago, but I believe this is a newcomer. This is Tesoro Corp, ticker symbol TSO, closing today $58.30, up about 1% or so on the day. This is a name that does about 5,000 contracts a day, so that's fairly active. From an odd block perspective, we usually profile names that do 200 to 500 contracts a day. This one doing 17,000 today, so really lighting up the tape, over 3x here on an ADV perspective. And what we saw, pretty much the lion's share of that volume coming in a little bit of a different take on what we traditionally see in the odd block. If you've been listening to the odd block for any length of time, you know we see a lot of people coming in, piling in for some upside calls. We saw that to a degree here, but actually not upside this time, not out of the money, but actually a little bit in the money calls this time, to the tune of 13,500 of the NOV 57 halves going up today on open interest of just 700 contracts for a price of about $4.85. So to do that break even for you listeners, that means this guy needs the stock to move up to $62.35 for this trade to start looking decent for him. This is a little bit of a different take, like I said, on what we normally see. See people migrating out to the 65s, even the 70s in this range. Instead, this guy going a little bit in the money, spending a substantial amount of premium, taking down a lot of juice. So this is someone who looks like he's pretty seriously aggressive to the upside here. Again, if you want to play the home game, follow along. Find more details than we have time to get to here on the old program. Surf on over to theoptionsinsider.com. Click on the unusual activity tab there, and you can have all these alerts in much more detail than we have time to get to here on the program. All right, moving on to the next one. This is one we haven't talked about in a while here on the old odd block. This is Target Corp, the other big block retailer out there battling tooth and nail with Walmart. This is the name that does about 16,000 contracts a day, so fairly active, fairly robust from an odd block perspective. Doing 30K today, or just about, so a pretty active day in Target as well. We're looking a little closer to home in Target here, not November, but actually here in July, to the tune of the July 57 half 60 put spread. At the time we profiled it on the site, it went up just a hair over 7,000 times for about $1.60. Of course, by the end of the day, we saw another 3,000 piling in, bringing that total to 10,000 on the day, all for prices around that $1.60 level. 5,000 open on the 60 strike, so clearly opening there. 12,000 open on the 57 halves. So this could be a roll. We'll see when we look at the open interest tomorrow if there is any adjustment or if it's just opening on both strikes. Either way, it's probably a mildly bullish trade here. Someone coming in, blasting out the 60 strike by July and guessing that we're going to be around these levels or bouncing back up to those levels, I should say, sometime soon, because this is an in-the-money put spread right now as we're looking at the levels here in Target. Senor Sebastian, what's your take here on this in-the-money put spread in Target?
Yeah, kind of a funky one. I guess the guy wanted the credit for the account or something like that, and he's bullish Target. That's my guess. Maybe he's got some sort of like put-selling rules or something like that, because what this essentially is a call spread more than it is a put spread. And, you know, that's kind of my best bet on why the guy was doing that. Either he's got a mandate or he wanted the cash in hand to do something with. I don't know.
Yeah, this is two in a row that are a little bit different than you might normally see them going up. First, the in-the-money calls, and now an in-the-money put spread as opposed to the typical out-of-the-money put spread, or like you said, a call spread on the other side of the fence. Perhaps he's one of these people who believes it's better to collect than to pay, even though you're doing the same thing at the end of the day. Going back to the old dollar realm, in particular, Dollar General, we talked about this one quite a bit in the past. It's been a while since they've been back on the show. This one, of course, ticker symbol DG, closing $57.69 today. This is the name that does about 12,000 contracts a day, so another fairly aggressive one, doing about 25,000, or roughly 2x their ADV today. And again, going out a little bit longer term here in the old odd block, rolling back out to November, where we saw the NOV 65s going up for about 5,000 times for about $1.05 at the time. This looks like a buying spree out here. Then the guy bought the Jan 75s for 55 cents. Again, looks like about 5,000 times. And then we also saw, on top of all of that, if that time spread there, or that time stupid, I suppose, wasn't enough for you, we also saw out in NOV again, the NOV 50-60 strangle going up At the time we profiled it, about 1,500 times. Like a little bit more went up after the end, but not a ton more. So if you're playing the home game there, listeners, that's someone coming in, buying the no 50-60 strangle, buying the no 65 calls 5,000 times on that end, and then buying the Jan 75 calls 5,000 times as well for 55 cents. Whether or not all of these are related, this is a substantial premium Palooza going on out here in Dollar General. Tusaw, I knew you were a big fan of Dollar General. I didn't know you were this big of a fan.
As much as I love Dollar General and I love the stupid, I wish I could say this was my trade, but unfortunately it's not. This is one that, like you said, this is definitely a premium Palooza. This guy is definitely looking for some bullish movement in one way, shape, or form. Now, did he also buy the Jan 75 calls 5,000 times?
Yeah, I think it was all in one spread. So,
okay, got it. So
yeah, it's a call stupid. So, and actually, I later looked and he bought the 16s as well for at the 85 strike.
Wow.
Now there was some open interest, so it could have potentially been like a some sort of whatever, but who knows.
Dollar's mentioned in a lot of research lately over the minimum wage legislation that's occurring around the country now. Started up in Washington State, and one of the comments is that Dollar will fall into the arms of one of the other very big box retailers. Now, that's speculation, but I don't want to get on a political soapbox, but this minimum wage thread that's running around the country now is clearly potentially going to impact retail, and the possibility of some consolidation in retail will be one of the, I don't know if it's an unintended consequence or an intended consequence as this thing kind of plays out. And Dollar is one of the names that has been talked about as being will consolidate into somebody larger candidate. So I don't know if that's what's driving it, but that's been some of the conversation about DG lately.
Yeah, I mean, I don't want to go down the minimum wage rabbit hole, but yeah, I mean, I think that if that's the case, you're going to see Dollar. I mean, who's going to buy them? Walmart? Or do you think they merge with like Dollar Tree or one of the other ones? I mean, what are the rumors out there?
The talk is consolidation.
All right, and you know what happens when those firms consolidate? What happens? They get rid of all the ones that are near each other, and you end up with a lot of people out in the street. Just saying. There's lots of bullish sentiment. We saw some of the bullish sentiment yesterday trading in Dollar General as well. So I think there's something going on, and let's keep an eye on that one. There could be some sort of merger deal.
Yeah, this one is definitely in the to be watched category. I don't think I've ever seen anyone gobble up this much premium across the months and across the series in one fell swoop like this. Tusaw, if ever there was a trade that had your name on it, it is this one. The Tusaw Dollar General multi-leg time stupid is certainly an interesting one to watch. I'm not sure if it's a sign of the times, but I did see the other day a Five Below store. So maybe we're phasing out of the dollar stores into the $5 and below. Perhaps the economy has moved on and the dollar is just too cheap. Interesting stuff. This is definitely one to file in the to be watched category while we go on to our final name here in the odd block today. This is NuStar Energy, ticker symbol NS, closing today $60.80, up about 3% on the day today. So not a bad day for NuStar Energy. This is the name that does about 1,000 contracts a day or so, doing a whopping 30 today, and pretty much all of that volume come in one sizable, very close to 1x2 here. We saw the SEP double or SEP 55, D60 call 1x2 going up. The SEP 55 calls going up 8,250 times for $5.20. Then the D60 is going up 15,000 times for $2.65. I guess if there's any narrative to tie together the odd block today, it is a little bit of a different twist, a little bit of different spin on things we see all the time. We saw a lot of the in-the-money stuff as opposed to out-of-the-money stuff today. And then, of course, we have this, which is we've seen a lot of ratios and 1x2s up here, but not often the time ratio, the time 1x2, where they're buying SEP, selling DECE. Either way, an interesting one. Take us home, Mr. Greasy Meatball. What's your take here on this NuStar Energy 1x2? Normally,
when you see these type of ratios, you expect them to be kind of an out of the money. This is like a weird at the money ratio spread. It was funky across the board. Maybe it was some sort of roll or something like that, but no, normally you would see this like the Disney trade. There was a Disney trade yesterday where they bought basically an at-the-money January Disney call and then sold a bunch of April way out-of-the-money stuff. And you see that all the time. I think it's a savvy trade. What you're less likely to see is something like this where they're selling a bunch of at-the-money and buying something that's in the money. Unless it's a roll, which, the ratios don't quite add up to that, then that is just a strange trade across the board.
Now, I am looking right now as we're talking. There are 8,800 open in the SEP double, so it could very well be a roll because that number is pretty close to what we're seeing going up here.
That could be it.
It could be rolling up and out. That would make a little bit more sense. Then it could be the traditional up and out roll. Either way, listeners, you can play the home game and watch the open interest numbers for yourself while we keep on rolling right on into our next segment, the Xpress Block.
The Xpress Block, brought to you by Options Express by Charles Schwab. Options Express by Charles Schwab lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources. Options Express by Charles Schwab is the online broker for all traders. Best of all, Options Express by Charles Schwab lets you trade stocks, options, and futures all in a single account on powerful yet easy-use trading platforms, including mobile devices. Visit OptionsExpress.com for your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, Mr. Viceroy, it's your portion of the show, so I will toss it over to you. As you started at the top of the trading block, you said it was a pretty interesting day over there at OX. A lot of volume, a lot of interesting stuff, lighting up the tape. You also teased us about perhaps some Schwab customers may be able to trade for free coming down the pike pretty soon. So go ahead, sir. Take it away. The floor is yours.
Yeah, and today I'm going to put the Schwab sticker on the Viceroy hat and talk Schwab for a little bit. But Schwab is currently running a promotion in the Schwab private client group. Now, let me emphasize before you rush out and start trading thousands of contracts, this is not an across-the-board elimination of fees. This relates to a select group of private client customers who are basically folks with significant assets in the account, and part of their account is fee-based with commissions added to it. Option commissions now for those accounts are, for the time being, and I don't know how long that is, but right now they're getting an email saying you can trade options commission-free. And I will hang this tease out again and tell you that in this industry, you will find clients with substantial assets who are being offered free deals kind of across the board. And what that tells you is more money is being made off the assets than is being made off trading. As we saw some consolidation this week. In the brokerage industry last week, we saw some consolidation. But if you are a Schwab private client customer, look for the email or reach out to your rep or your RIA and see if your account is one that qualifies for the fee waiver on options. So for that group of customers, at OX, when we talk about something impacting customers, it impacts, 400 or 500. At Schwab, that means it impacts probably 40,000 with the scale at Schwab. But if you are a private client customer thinking about dipping the toe in options, or you trade a little bit of options, reach out to your rep or reach out to your RIA when you get this email and talk about maybe enhancing your account, maybe going from level 1 to level 2. And if there's some trades that you've been reluctant to pull the trigger on, I don't think a lot of people are reluctant to pull the trigger because of fees. Let's put an asterisk up there, and minis, I get it. But they're not going to be here much longer, so let's not worry about that. But no option fees to some of the private client group. The other email that went out today was the announcement, which we've already talked about on the show, to the Schwab mobile customers, of enhanced option capability on mobile devices. You will have 2 and 3 and 4 leg spreads coming shortly to later this year. Idea Hub is already on Schwab Mobile with 3 of the tiles. So you're seeing covered rights, you're seeing earning plays, and you're seeing what's trending. By the way, at OX, it's called What's Hot. At Schwab, it's called What's Trending. Tells you the different regulatory environments. But a lot of enhanced capability and options on the mobile platform. And the other important piece of news is Hub for Futures, which has been sitting around waiting for some approvals, has been approved, has come through the new product committee at Schwab. And we will start meeting this week on what we have to do internally to educate people. But Hub for Futures is coming. That's on the OX side. It will have 4 products in it initially. It'll have the crude contract, the gold contract, the E-mini S&P, and the E-mini NASDAQ. And it's going to give premium harvesting ideas on the options for those 4 instruments. It will have the futures weeklies in it, which are a great product in terms of flexibility. But it will be premium harvesting, so it will be credit put spreads and credit call spreads. It will not have an iron condor because at this point we do not have a 4-legged futures ticket. We do on the security side. So Hub on the security side has the iron condor in it. The other thing is we're going to start to build out a diagonal into Hub. So Mark talked about the Disney trade yesterday, buying the leap and selling the Aprils. What we're designing is buying the long dated and banging a weekly out against it, hopefully every week if you get a relatively neutral market. It's a form of a covered right in a sense. It's not a pure covered right because instead of owning the stock, you're going to be buying a longer dated, little bit in the money option. But in terms of feedback from customers, they want more harvesting. They want more income-oriented trades. Also on the drawing board now is speccing out a broader earnings product, which is going to show the expected move in earnings and talk about where to position options in that. Now, both of those strategies I've talked about, the diagonal and the earnings, those are not weeks away, so don't start sending me the emails that say, you promised this would be up by June 15th. We're working on them, and they're coming. Futures options, maybe by the end of June, early July, because the holidays is kind of a slow period, but hopefully by mid-July. But lots of terrific tools coming out for OX and Schwab customers. For the Schwab customer, I have a little bit of a bias here. What we're doing essentially in derivatives is porting over the outstanding OX tools. And we're sitting here every day working on it and trying to deliver as much as we can, as quick as we can.
Wow, a jam-packed Xpress Block there, Alex. So listeners, if you want to learn more about that, whether you're an OX or a Schwab customer, a lot of stuff cooking for you. Surf on over to your brokerage homepage of choice or log into your account if you want to find out more information about all of that stuff. Meanwhile, we're going to keep on chugging along with the show right on into our final segment. Yes, it's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, listeners, you know what time it is. It's time where we tell you what we're watching, what we're keeping an eye out for the rest of this week. And usually in this part of the show, this time of the month, this is where we'll be telling you to keep an eye on non-farms for tomorrow. But hey, the rest of the market is already saying, who gives a crap? So who are we to say anything different here? No one's really buying any premium. No one's really doing much of anything. As you said at the top of the show, they're already hitting the vowel going into a big announcement like tomorrow. So perhaps you're one of those as well. So aside from non-farms, what else are you watching for the rest of this week into the weekend? Perhaps we'll start with you, Uncle Mike Tusaw.
Well, the fruit company for sure. I want to see how the split turns out. Gold's been kind of leveling off lately, so I want to see if that can come back. And also, silver is very much on my radar screen right now. So not looking to add to the position just yet, but we're getting closer. And then one thing I'd like to also mention is that there has never been a better time in the history of the entire stock market to sell the S&P. But with that in mind, I do also want to mention I do remain a bull in the marketplace. So I think it's a great time to either buy calls or buy puts on your long positions.
And maybe next week we'll get into some of what you're doing out there in the metals because they have been pretty active of late. Maybe some interesting opportunities to perhaps employ what we were talking about last week, the ratios, the repairs, that kind of stuff, depending on what's been going on in your gold portfolios. But they've been taking it on the chin a bit lately, so might be a good time to talk about that. Meanwhile, Mr. Alex, what are you watching for the rest of this week, sir, into the weekend?
So everything interest rate related. The world has been buying bonds. They've been buying the U.S., German, the U.K., and the Japanese 10 years. Everything with a dividend attached is being bought, and some of those things are being overwritten as well. So the telecom stocks, the big oils, the Exxon-esque type of stocks, and so that's been driving it. And I know I sound like a fundamentalist in that environment, but we're looking at rates, looking at VIX. I think VIX is going to continue to go lower. The ECB announcement this morning wasn't a shock, but nonetheless the market reacted. So looking at everything rate related, which means quality U.S. blue chips and the options on those.
All right, and take us home. Mr. Sebastian, what are you watching for the rest of this week into the old weekend?
Yeah, to Alex's point, we've been below 13 in the VIX for 2 weeks, maybe 2.5 weeks, Mark, something like that.
Sounds about right.
We dropped below 13 in September 10th, 2006. We didn't see the other side of 13 until late February of 2007. So for those that think that as soon as you see an 11 handle on VIX, we have to pop back, it could be a while. So I would not be planning on a pop tomorrow. Non-farms, and I think watching those straddle prices consistently, if one manages the straddle properly. That means not dynamic hedging, but manages the straddle properly, allows a little bit of momentum to move. Straddles are not that hard to make money on, and that's the trade that I like best right now. Is kind of smartly managed long gamma.
All right, that's going to do it for the Around the Block segment. It's also going to do it for this episode of the Option Block. But as always, before we go, let me check in with each of my cohorts here on the old All-Star panel, see what they have cooking up that may interest you until the next time we can all gather here around the old microphone. Perhaps we'll start with you this time, Mr. Viceroy, pride of place once again. What's coming down the pike over there at OX Education?
Okay, I'll just touch on two events. June 10th, Tuesday. These are webinars. All the webinars are free. All the live events are free at Options Express. June 10th, Fundamentals Driving Ag Prices with Dan Gramza, talented, bright guy. One of the people we do webinars with who I really like. Not that I don't like other people, but June 11th, Orientation for New Futures Customers. Mike Zaremski, who runs our futures desk, will be showcasing the tools, and apparently the industry is such that futures options are spiking in growth again. So if it's an area you're not familiar with, even if you're not a futures-enabled account, come learn about the tools that are available here, and maybe you want to become a futures account.
And Mr. Tusaw, what's coming down the pike over there at RCM Wealth Advisors?
Two things. Like I mentioned last week, we are still planning our 2 live in-person events in the coming month or two. More information on that in the coming weeks. And the other thing, I just had a life event recently, and then I'm just thinking in terms of just as an advisor. I have a lot of clients that are fairly wealthy, but we probably have a lot of listeners on this show that might be looking to just start to save for retirement, maybe for $200 to $300 a month, that type of thing. And I'm not going to be doing this for a very long period of time. So if you're in that category and you would like to work with a professional advisor, call me. I want to get it to where we're helping people get to the levels where they need to be. And this is something, like I said, I don't have the ability to do this for a very long time, so it's kind of a first-come, first-served basis. But I want to work with people in that category to help people get to the next level. My direct line is 312-212-3531, or email me personally at mtusaw@rcmam.com. Once again, this is not something that's going to last long, but I would like to help younger people to take the investing to the next level.
There you go, listeners. A personal time with Uncle Mike Tusaw. Take advantage of it while it is available. And last but certainly not least, Mr. Greasy Meatball, what's coming on the pike over there at optionpit.com?
Well, first off, let me say, Mike, how refreshing it is to hear that. So many advisors spend so much time worrying about rich people when it's the people who really aren't rich and aren't wealthy, that don't know what they're doing, that need a guy like you to help. And the fact that you're willing to basically work with people in what is for what you should be making per hour, kind of a net loser, I think is just it makes me happy, and I appreciate that as a professional in the business. So just want to let you know that's great. In terms of Option Pit, we've got our chat service. Friday is the last day we're going to be offering our one month for $2.40. And then before full price, we've also got our special gold course that is pretty freaking awesome. I'd invite everybody, $2.40. I mean, I spent more on my large coffee today, and that's the charge. That's what we're charging for 1 month of getting to listen to me and Andrew talk for, what amounts to 3 or 4 hours a day. So I would absolutely take advantage of that while you can.
All right, and unfortunately, that's all the time we have here for this episode of the Option Block. And on behalf of the Viceroy and Uncle Mike and the Greasy Meatball and, of course, myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the show. Don't worry if you wrote in with some questions we went a little long today. We'll get to those on Monday's show, and we'll, of course, see you next time right here on the Option Block.
The Option Block was brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.